Oh man. You know, the other day I came on here and I said I just did like a 20-minute video and somehow it didn't record. Yeah. Yeah, I just did it again. But this one's important. So I'm going to bite the bullet and do it again. This beautiful chart you see behind me, as you can see from the date, October 5th, 2012, that's the silver chart. And you see that little drop off a cliff line, the green one? That's the daily one. As you can see, the red one's the day before, and the blue one is the day before that. And for all intents and purposes, that blue one, even the red one, aside from, excuse me, right there, that's a little odd, isn't it? They tried to do a little raid there. But the blue one, let's say that's just a standard, what you would expect on any given day on a stock or something. Then you have that red one, which was the day before, you know, Thursday. And then the green one, which is most important, which was yesterday, Friday, right after the market opened. What you are watching right there is a lot of people with paper contracts, silver contracts, just getting their houses cleaned. They just got their houses cleaned, or their clocks cleaned. They may have had some stops in place to automatically trigger a sell when it goes down 10 or 15 cents, but that move right there is about 60 cents, so they lost some money. And then within seconds it went right back up to only lose about a total of 10 cents from where it was. But you can't call your broker and say, hey, can I get a do-over? It was only 5 seconds after they crashed it, it went right back up where it was. Do I have to give you a margin call? Yes, you do, because we automatically liquidate your account at the next available buyer, which was at $34.40. Your account's been sold. You have a little deficit in there. You need to come up with some money. Meanwhile, those of us with a stack of silver can sit by and watch it drop like that and go right back up to where it left off immediately and never get a margin call. I don't have a paper contract. I got the real deal. Didn't hurt me at all. I can actually laugh at people that happened to, because I've been warning them, get out of that damn market. And if you're wondering how much paper silver it took to drop that 60 cents right there, 50 million ounces. That's what it took to drop it 60 cents. And then, as you can see, it immediately, right above my finger, bounced right back up to 34.75. So it was about 85. It was about 15 to 20 cents off of where it was before it dropped. It went down 60 cents and then back up, and only lost basically 15, 20 cents from when it started to fall. Physical silver holders, doesn't matter. But the other point of this video is that, once again, 50 million ounces of silver, paper silver. Not 1 ounce of it was created out of the ground, mined, anything. Didn't add to any kind of stockpile that they had. It was just paper out of thin air being printed and sold on to the COMEX as a futures contract. It is taking a massive amount of silver now. As I've said in my last couple of videos about silver, it is taking a massive amount of silver now to move the silver market just a tiny bit. There's an old rule that I love. It's called the rule of diminishing return. And at first, when they would do that, the market would be hurt. It would suck. Now they're doing it, and it's barely budging, and then it bounced right back in the face of them doing this seconds later, or a few minutes later, whatever. And another thing, as Bix Weir has been talking about, he was taking a look at the bank participation report for the month of September that was just released. I realize we're in October. This is just last month. It shows that the top 4 banks, naturally, too big to fail, the ones that are hoarding in all these futures contracts, namely JP Morgan and friends. But anyways, the top 4 U.S. banks are up to their necks in COMEX shorts. In the month of September, they added 9,024 contracts times 5,000 ounces, because each contract's 5,000 ounces. That is approximately 45 million ounces net short. And the price rose 10% on top of them doing that. they've been going short week after week after week, and everyone's scratching their head saying, oh my God, the commercials are short again. They're net short even more. Oh my God, next week they're more and more. And the silver price rose 10%. Didn't care. So I don't know what to make of this yet, other than the rule of diminishing returns is kicking in heavy duty. So soon they're going to be trying to drop a massive amount of silver on the market, just make you shocked, and it won't hardly budge. That's what it's coming to. Does that mean that they can't destroy the price one more time to try to teach everybody a lesson? Absolutely not. You know they have the power to do that. And then the same thing's going to happen that happened last time. It'll hit a nice little low, people will buy up again, and then the low won't be as low as it was last time, it'll go higher. The new high will go higher, etc. That's what's coming. So all you have to do is keep stacking physical silver. These little market moves and stop positions getting hit, boom, stops getting triggered. You could laugh. Warn all the bozos. We told you so. Get out of that paper silver market. We're warning you. Get the real thing. So that is all I got for you.